The anatomy of trading breakouts. I posted a couple charts yesterday, and I had quite a few people ask questions, and I think there's some uncertainty as far as how to trade these breakouts. What is a breakout? How to set your stop losses. So I wanted to go over a lot of this in this video. The breakout trading is used by active investors to take a position within a trend's early stages. In general, the strategy can be the starting point for major price moves, expansions in volatility, and when managed properly can offer limited downside risk. These are really favorites of mine to trade. As an example, here's Tron, okay? And I stated buy the breakout or buy the retest. So you're not going to buy it now while it's in the triangle. You're going to let it do its thing. It's staying in the triangle. You're waiting for it to move and then close outside of the triangle. See all these long wicks up here? This is where it broke out of the triangle, but it came back down within the time frame. Also, I want to explain this. So here's how to read this chart. So this is Binance, and this is TRX, BTC, and this is 240 minutes. 240 divided by 60, that's 4, so it's 4-hour chart. So this is TRX, BTC 4-hour chart on Binance. Now, so what you're looking for is you're looking for a breakout of this. It closes, and then possibly you'll retest and bounce. And I'm going to go over this more in a second. So a breakout is when a crypto price moves outside a defined support or resistance level with increased volume. You need that volume as confirmation. So you're going to look for more than usual volume on the move. That'll confirm that a lot of people are looking at the exact same trade and there's volume that backs it up. A breakout trader enters a long position after the stock price breaks above resistance. So keep in mind, we are opening long positions. So there's an advantage to trading both ways, but we're just not quite there yet. As a group, we'll advance to that level. Basically, short traders have an advantage because they can trade both ways. If it breaks out lower, they can open a short position and you'll see an increase. You'll make money as Tron falls. So we really want to make sure that they break to the upside. And as a side note, you'll put your stop loss somewhere in here beneath this trend line. You'll put your stop loss in here, okay? You don't want to get stopped out, so you have to give yourself enough room. Once a crypto trades beyond the price barrier, volatility tends to increase. The prices usually trend in the breakout's direction. The reason breakouts are such an important strategy is because these setups are the starting point for future volatility increases, large price swings, in many circumstances, major price trends. So what happens is people see this breakout and they start buying it, and that's why you get these tremendous pumps. Typically, the most explosive price movements are the result of channel breakouts and price pattern breakouts such as triangles, flags, or head and shoulders patterns. Again, my favorite. I like to see these patterns. I like to trade these breakouts. It's very easy. It's low risk. I don't like to lose money, and that's why I'd like to trade a lot of these patterns. This is an ascending triangle, okay? You can see it breaks out to the upside. So you would essentially buy it after it breaks through this support resistance line. Now, what's the target of this breakout? The distance from here to here. You put it right here, and this becomes the distance. And so that's how you know where to take profits at, okay? You're probably only going to get about 70% of this most of the time. Really, when you open a trade, you want to have a plan in place as far as where you're going to start taking profits. Maybe you're going to sell 50% of your holding here, and you'll sell another 50% if it goes any higher. That way you're not left FOMOing if it continues higher. You sell a percentage. Finding a good candidate. So I try to help you guys out with this and post a lot of these charts. I would love it we're going to progress to a point where you guys are going to start seeing these trading setups and you're going to be posting them in the group. Right now, it's real tough to trade, so I'm kind of very cautious about these trading setups. So that's the reason why I like these patterns, is because if it doesn't break out, you're not opening the position and there's no potential for losses. And if it does break out, you're basically setting your stop loss so close that even on a fake out, you'll only take a small loss. The key is you're going to learn to use different amounts of capital so that if there's uncertainty in the market, maybe you're going to use a very small amount of your portfolio to trade. And if it's a better trade, you're really sure about how the market is trending, you're trading with the trend, then it's a lot easier, and you could use a larger percentage of your portfolio on a trade like that. So this is going to give you a good risk to reward ratio. So when trading breakouts, it's important to consider the underlying crypto support and resistance levels. The more times a crypto has touched these areas, the more valid these levels are, the more important they become. The longer these support and resistance levels have been in play, the better the outcome when the crypto price finally breaks out. If this were to break to the upside, you would take the distance here, or you could take the average of these swing highs and swing lows. Okay, so swing high, swing low, swing high, swing low, swing high, swing low. You could take the average of that. Let's say over here you're at about 62. Over here you're at about 68. So you've got a 6-point difference, $6 difference. So that's going to be about your target. So you'll add $6 to right here. It'll put you here. That's your target. And then again, you're buying the breakout, or when it comes back down and bounces and retests and bounces off this trend line. As prices consolidate, various price patterns will occur on the price chart. Formations such as channels, triangles, and flags are valuable vehicles when looking for cryptos to trade. A lot of times, I'll be scouring the internet for news and I'll see somebody here post, hey, here's this pattern here, or here's this pattern here. You have to use as many eyes as you can in order to find these setups. The easiest consideration for these types of trades is an entry point. Entry points are fairly black and white when it comes to establishing a position on a breakout. To determine the difference between a breakout and a fake out, wait for confirmation. For example, a fake out occurs when price opens beyond a support or resistance level, but by the end of the day, we wind up moving back within a prior trading range. If an investor acts too quickly or without confirmation, there's no guarantee that prices will continue into the new territory. Many investors look for above average volume as confirmation. You can see here on Tron. So, okay, here's an example right here. You see this long wick right here? All right, this was a fake out. It would look like it was going to break lower. Now this is a 4-hour chart. So it means during this 4 hours, this price action moved up the length of this wick. Okay. So it was a solid green candle all the way down here at one point. But then during that 4 hours, the price pulled back up and went back into the triangle. So this would be a fake out. Sometimes you'll get these as possible fake outs where the wicks go outside of the triangle, but then it comes back down and it closes inside the. This is a symmetrical triangle, so it has a slightly higher chance of breaking to the upside. So you want to get accustomed to these patterns and the percentages, and I post these pretty often. There's going to be a lot of learning that needs to be done in this group. This is not going to come easy. It's going to take a lot of work, and in the future, the amount of money you make is going to be ridiculous. A lot of people are like, Chris, why aren't you trading this market? Well, I'll tell you why, because I made so much money the beginning of the year, and now there's a lot of uncertainty. I'll make trades, but I want to see good setups. This is a good setup to me. I'd trade this. I'm posting setups that I would trade. The problem is, if I'm going to sleep, I'm not trading it. If I'm making a YouTube video, I can't take 4 hours away from the chart and go make a YouTube video and expect to make good trades. I cannot answer everyone's questions and watch charts at the same time. It's just not happening. So trading like this takes a lot of time. However, you can catch the breakout, set your stop loss, and walk away. Because at that point, it's beginning to move higher. You just got to keep an eye on it as far as taking profits. Planning exits. So you want to use predetermined exits. They're an essential ingredient for a successful trading approach. Where to exit with profits. So you want to look at previous behavior like we talked about. This is about 6 points wide or $6 wide here. So you basically want to add this to the length here. And so 69 plus 6 is 75. So your exit strategy, or you basically start taking profits, possibly some at 73, some at 75, and you might even leave some for 77 in case it goes that high. You don't want to get too greedy. You want to take profits off the table, move to the next trade. Wash, rinse, repeat. After the price goal is reached, an investor can exit the position. You can exit a portion of the position. You can let it run the rest of the way. You can raise your stop loss up. That way you're locking in your profit. So if it does pull back, where to exit with the stop loss. So it's important to know when a trade has failed. The number one thing you have to learn in this market is to know when a trade has failed and to know when to take a loss. A lot of people in retail were under the idea that they need to hodl. They need to ride these downtrends down to the bottom. No, that is completely wrong. If you're trying to trade this market, you don't want to lose a bunch of money. It is important to know when a trade has failed. Breakout trading offers this insight in a fairly clear manner. After a breakout, old resistance levels should act as new support. Old support levels should act as new resistance. So this line right here at this point is resistance. So price comes up, resisted. Price comes up, gets resisted. Price comes up. Well, it breaks out here. So this is a breakout. All right. So now it comes up and then it's going to retest previous resistance, becomes future support. So this should bounce off of here. It doesn't. So it's a failed breakout or a fake out. So you can buy here and you can still get a little bit of profits. It's always safer to buy the retest. So when you're setting your stop loss, when it breaks out, you can put your stop loss down here. You don't want to be too close to this resistance support line because then you might catch a wick. So institutional traders and smart money, they'll attempt through, it's called stop hunting. They will attempt to activate your stop loss, which basically brings liquidity in the market because all of a sudden that happens and you've got to buy back into the trade. Then you're buying at a higher price. After a trade fails, it's important to exit the trade quickly. Never give a loss too much room. If you're not careful, losses can accumulate. This is why I like to watch it. Where to set a stop loss order. So we talked about it. You want to put it comfortably in a position in this area. So after it breaks out, you want it to be below. This works anywhere in crypto. That's why it's important. You have to learn how to draw these resistance and support lines. 4-hour chart, okay? That's important. You need to be, and this is TRX BTC, not USDT. So here's our triangle set up. We're looking to buy the breakout. So here's what we're looking for exactly. When I say buy the breakout, here's what you're supposed to do. All right, so when this price comes through here, you want to see some volume come in here to basically support your breakout. So let me show you an example. This is a bull flag, essentially, okay? So you got your bull flag, and you see this candle broke out, and it closed above there. So it broke out, and you got this volume, which look how low the volume was back through here. Okay, now on this breakout, you had decent volume, and then you get it right here. So that's volume confirmation. However, the price target was only the distance here. So that's basically where a lot of people would have taken profits. However, it continued higher. This can go a lot of different ways. Like it could have went down just as easy. So you really have to, take some profits off the table. Maybe you sell half of your TRX right here, and then it continues higher and you make additional gains. Now in this area, so we're looking for a green volume spike, okay? You're gonna get the breakout, and then in a perfect world, it would come back down and it would bounce or retest. This is the support resistance line, the outside upper trend line of this triangle. So it would retest, and even better would be to buy here. So here's what you can do. Let's say it breaks out. You're working with, a 2% of your portfolio, okay? And you break out, you buy 50% of what you're going to buy. And then it comes down, it pulls back, and then you get this bounce here, and you buy the other 50% because you're more certain, and you really scale into this trade. And then again, you're taking profits up here. Now, how do you find out your target? Really simple. The distance of the open end of the triangle is the target. That's how you get your target price. So 595 Satoshis. However, you're probably normally going to get about 70% of this. So you basically want to start taking some profits, at this level. Maybe you take half your profits here, 25% here, and maybe you're going to leave 25% in case it runs. You kind of have to play with the strategy right here. So I like to take profits. I'm going to take 50%, and then I'll take 50% more off the table, wash, rinse, repeat. I don't get mad about missing, these huge run-ups because they're not very common. Most of the time, you're going to get a decent pullback, and then you can think about re-entering the trade. But it's really wash, rinse, repeat, move on to the next trade. Ethereum. So these are another favorite of mine. Cup and handles. I made a ton of money back in April. This is the 12-hour Ethereum chart. So how do you know that? 720 means 720 minutes. So 720 divided by 60 is 12 hours. So this is 720 minute chart, okay? The way the cup and handle works is you've got your cup and then you've got your handle, and you want to buy the breakout. So what's the breakout? The breakout is the lip of the cup, and then you got the lip of the handle, which becomes this line, and you're going to buy the breakout. So you're going to get your volume that comes in, and it's going to break out past here. You'll open your position here. This is almost an inverse head and shoulders. So you've got your shoulder, head, shoulder, okay? So keep in mind that a cup and handle is part of this. So there's your cup, and there's your handle. Again, buying the breakout. So what are you looking for? You move past this line, and then you want to see volume come in, and we had some really good volume here. There's been a lot of it. I really like Ethereum for the month. There's been a lot of really good volume. It's doing a lot better than Bitcoin, obviously. You're going to buy, 1% of your portfolio here, and then on the retest, so we're going to come back down, hit this line, and then if we bounce, you can buy this bounce, and this is called the retest. And where do you take profits at? So you're going to buy your other 1% of the portfolio there. So you buy half here of whatever you're going to buy, because you're basically scaling into the trade. Now, how do you find the distance of the cup or the distance to the neckline on the inverse head and shoulders is the target. So you put it up here, and you're going to see it's about $203. Down here, you're at 154. So you could make 25% on this trade. However, we know we'll be good to get about 70% of that. So $35 would probably be where I'd take my last profits at. So I like to take profits about halfway through and then at the top. So I'd take profits here, and then I take the rest of the profits here. And I'll just exit the trade altogether. You guys might want to leave. You might want to sell 25% and 25%, leave 50% in. You would set your stop loss on this. You would set your stop loss somewhere comfortably in this area, so 140. So if you do take a loss, it's $10 on 150, so it's about 7.5%. You could make it even tighter, but you really need to watch these charts. If it's going to break back through this, the chances are it's a failed trade. You need to know when to exit that trade. So you'll notice this is the Ethereum USDT chart, 1 hour. Okay, same thing. Buy the breakout here, but you can see the price action isn't even to this point yet. You're going to have to draw your own charts. And anytime you see one of my charts that I post, like here's a setup, here's a trading strategy, you're going to want to go to CoinEG and just redraw the exact same chart. Okay. And that's going to give you all the numbers that you need. And then you'll be able to make that trade. This seems like a lot right now, but it becomes second nature and it becomes so easy. You won't even have to draw these lines in the future. You'll be able to just see it on the chart without even having to draw them. I draw them to help you guys out so you can understand what I'm seeing. Okay, so just to kind of sum everything up, you want to find a good setup. And that's the key here. You want to find strong support and resistance levels, and you want to watch those levels. You want to wait for the breakout. Do not buy prematurely. Wait for the crypto to make its move. Be sure the breakout will hold. So if you're going to take a trade, set an expectation of where it's going. If you don't, won't know where to exit the trade. Before you open up any trade, you want to have an exit strategy. Allow the crypto to retest, and this helps out a lot. When you see the crypto come back down, you see the price action come back down and bounce, that is the safest time to buy. If you want to start buying there before you actually start buying the breakouts, we don't always get a retest though. And you just have to, again, you're watching. A lot of this is almost day trading where you're watching the chart. Really where you want to open up a longer position is on a good retest. You want to know when your trade or pattern has failed. Make sure exit the trade. You don't want to gamble and get a bunch of losses. Like the goal here is to preserve capital for when the market gets better. If you can trade this market right now, you can trade any market. This is the elite of traders are having a hard time in this market. This strategy requires plenty of patience. You have to reduce emotion and be more objective about your trade. Take your money out of the market. Take your profits. Take 50% when it gets halfway there, and then hit 50% when it hits your target as far as where to exit. You've got to have a plan of attack. That's why it's tough for me when someone says, hey, Chris, well, what do I do here? You have to have your own plan in place first, and you have to be able to give me an idea. Do you have 12 hours to look at the charts today? Are you going to work tomorrow? Are you going? That's why these call groups don't really work, because most of the people can't watch these charts all the time, or their availability is limited, or they trade at certain times. The idea of this group is to teach you how to fish, not just give you the fish, okay? And that's why it's going to work a lot better, because you have to get to this point. You can't expect somebody to be able to think, okay, how are you going to pay your bills this month? Are you working with money that's extra? Can you afford to lose anymore? How much have you lost? Where are you at emotionally? There's so many things that go into trading that no one can fill your shoes, period. We'll see a lot more of these trading setups and trading strategies going forward. I just wanted to make sure and cover and kind of help everybody understand what goes into buying the breakout.